So this is the wrap up for the live market open on Friday, January 8th. Markets are moving according to different moods. Currently, we're in a better mood than yesterday. China managed to stabilize its stock market, stabilize the yuan, and oil prices are going up. Commodity currencies that suffered a lot managed to stabilize, and safe havens are a bit off the highs. So the safe haven euro currently hugging 108.80 off the highs. We're expecting no significant events in the Eurozone today. Levels to watch 109.50, 110, 107.60, 107.10. Pound dollar, we have UK trade balance. Pound dollar dropped yesterday to the lowest levels since 2010, managed to recover. Currently at 146.15. Levels to watch here, the lows of 145.30, and I would say 147. Still leans to the downside. Dollar yen, the safe haven, made this sort of double bottom at 117.40 when on the bad mood, when things became better. 118.40, some kind of resistance at 119.20 and 120, support 117.40. Dollar CAD went for the sky yesterday. 141.70 was the high with the falling oil prices. Also, WTI crude oil broke the post GFC lows and reached 32.08 currently. With the improvement in the mood, it's currently 33.74. 34.20 is the limit in crude. I would say for CAD, it's 140 as support and 141.70 as resistance, but it's all about oil, and oil. Aussie dollar also yesterday had a bad day, fell below 70 cents, very round number. Retail sales in Australia were okay. Currently 70.33, I would say resistance 70.65 and 71.50. Support at 69.40, low support, which was a double bottom a few months ago. Kiwi dollar 66.46, between 66 and 67. No significant events for the Kiwi today. Of course, the big event for today is the non-farm payrolls. So we're expecting around 200,000. I believe real expectations are closer to 210. I would say that 250,000 and above would be a superb report, and 170 or below would be a disaster report. I mean, a more significant impact. But it's also important to watch the wages, especially if we are within the range. 0.2 is expected on the monthly level, and I think it was 2.3 year over year. Now we're expecting, I think, more of the same. Let's see if we get back to 2.5. This could be a skewed report for several reasons. Retail hiring in December. Last year we also had a superb report. ADP was a bit high. It also doesn't have the same impact because of several reasons. First of all, the focus of markets on what's going on in China and other geopolitical issues, as well as the fact that we already have the rate hike, the first rate hike behind us. So the second rate hike is also important. So is the third and the fourth, but not as important as the first time. Okay, the first time in 10 years, almost 10 years that the Fed raised rates. Anyway, it's a big event. We could have crazy reactions, especially in safe haven currencies, in euro dollar and dollar yen. It's one of the most complicated reports after an extremely busy start to 2016. Okay, for those of you trading the Canadian dollar, we're expecting the Canadian jobs report. Again, oil prices overshadow the Canadian economy, but it doesn't mean that we won't have an impact. We're expecting there a rise of 10,000 jobs and the stable unemployment rate at 7.1%. Okay, so that's the wrap up for today. Before we move to the preview for next week,